Cool. Welcome, everybody. This is the Trader Circle Group Coaching, November 9th, 2025. For those who are new here, welcome. Pretty much all we do is go over whatever you guys want. So you can put some questions in the chat if you want. You can come up mute, do whatever you want. The floor is yours. So whatever you guys want to go over, let me know. We'll start talking about it. And we can go over anything. It doesn't matter if you're new, if you're advanced, any struggles, psychology stuff. It's all good here.
So no one says anything. I'm gonna ask you. So I know you said something about going out of the money,
Mhm.
no more than 15 positions for like any of your contracts.
Like the strike price, you mean?
Yeah, strike price. I'm sorry,
Hmm.
because I know Tesla they do have some cheaper ones up a little high, but I know that's probably a little dangerous.
Yeah, usually for Tesla, just to keep like I'm usually like 10 strikes away at the maximum. Sure, we can stretch it to 15 because the ATR is usually above that. But generally, I rather collect the more delta if I can, or more premium as it goes in my direction. And then by the time it hits at least like halfway through some targets, we're probably going to be in the money by that time. That's just my preference. I know some people go like 15 strikes, but just as a general rule of thumb, no half its ATR when it comes to the strike prices and stuff like that.
You said no more than what?
No more than half of ATR.
Okay.
Yeah, so Tesla ATR right now is about 20 bucks. I wouldn't go more than 10. But again, if your account may need it, you can probably stretch that to 12 to 15. I would just paper trade it to see how functional that is. Because if it pulls back, the change in IV and things like that might affect the premium of the contract. And even if it does come back to, let's say, where you got in at, you might still be red and things like that. But again,
Okay.
my personal preference, no more than 10 or at least half its ATR. I usually only really trade Tesla options anyway when I'm day trading. I'm usually just swing trading like other random stocks that I find off a scanner or something like that, or ones that I'm used to anyway. How do you usually decide on your stop loss distance? Right now, I try to use ATR, but I am not sure what period to use. Um, really depends on you, Sam. Like I just use the stop loss in regards to the strat, right? So let's say, as an example, if I'm going to take this 2-1-2 down on Tesla, let's see what we got here. I'll usually just use half of the previous bar as my stop loss or the candle that got me in, right? So in this case for Tesla, my stop loss for tomorrow, assuming we don't gap up or down, is going to be about $4.75, maybe $5 if I want to stretch it a little bit. But we can use our stop loss that way. We also have the option of, let's say the next bar opens up here. Oh, whoops. Let's adjust that. Let's say the next bar opens up here and then we trigger down. So let's pretend this block here is our candle. We can put our stop loss above that candle, or if it's bullish, below it, right? But this is how I would do the stop loss, either one of these two, either the 50% or the trigger candle being my stop. Because especially if it's an inside bar setup, generally we shouldn't be coming back to entry. If we do, the probability of the trade winning is going to be lower. So those two could be a little better. And this is when I'm day trading. If I'm swing trading, again, depending on the stock, but generally when I'm swing trading, it's almost always going to be the setup candle, depending what the risk reward may be like. Let's go to Palantir actually, because I was looking at a short there a few weeks ago. So let's say this example here on Palantir, we have this 2-3 down. And I believe I was aiming for this low over here originally. Obviously, the stop loss, if I use the top of the three candle, is way too high, especially it's like, it's a swing trade. I don't want to risk anything too crazy. So I can always just fib out the three candle until it triggered the trade, right? And again, going back to the 50 fib. So I get my stop loss, something like this, $10. Have a, target. Whoops. Have a target at this three, which I hit last week, here, 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 so on and so forth, strat targets, stuff like that. Now, the setup candle in this example would be too wide for me, so I'll just go for the half of that trigger bar. Another example to show you on Lucid that I was looking at for, I think, last week, but I ended up going short again anyway. Let's say for tomorrow's example, or for this upcoming week. For Lucid, I'll probably use last week's entire candle as my stop loss, just because, it's only $2 against me, right? And then the target is the take profit levels are pretty good, or the risk reward is pretty good for this trade for me. Is that making sense? Any questions on that? Cool. But yeah, using ATR for the stop, I won't say that it doesn't make sense. I just haven't found a way to make it make sense for myself. At least how I can incorporate it as a stop loss. Because it's like, are we going to use half the ATR? Are we going to use a quarter of it? The full amount? It all varies. Yeah, if you're using the 15-minute candle, let's see if I can find anything. With the lower time frame, I'm kind of just using like the setup in and of itself as my stop loss. This is not the cleanest W, but I'll just use this as an example. Let's assume this W was cleaner, right? I'll get in here and then I'll just have my stop loss down here and then, target whatever targets I may have. The sensor being one, the completed W being the other. For this specific setup in and of itself, I'm using that as the stop loss, right? So the bottom right is always going to be my stop loss. Doesn't matter what time frame I'm on. If it's 5 minute, 15 minute, 1 hour, I'm just going to adjust my position size to make sure the dollar value that I lose on the trade is still within my risk tolerance, right? I don't want to overly expose myself because the 15-minute stop loss, let's say on YM in this example, might be 123 points, where on the 5 minute, it might be 60 points, or on the daily, it might be like 200 points, right? So I'm always going to adjust the position sizing to at least match a dollar amount that I'm okay with losing on the trade. That makes sense? Sweet, of course. Welcome. For those who are coming in, whatever questions you have, put it in the chat. Fidel, I saw you wanted to go over ticker selection and my daily process flow. Cool. Ticker selection, when it comes to the watch list that I always put out, pretty straightforward. It's just the list that's always there. I used to kind of put some of them in and out, but people just kept on asking me to put it back, so I just left them permanently there on the chart. When it comes to like swing trades, I'm really just looking at I'm really just looking at the scanner that I have on Thinkorswim. So looking for, inside bar setups on the daily, weekly, time frame, things like that, any actionable signals, whether they're hammers or shooters, so on and so forth. When it comes to, I guess like my daily flow when I'm gonna be trading, I always do my watch list the day before because it's based on the strat and we're using the closed candles levels, breaking above or below. At least I do on the 4 hour. From there, the following morning, what my morning looks like before I start trading, pretty much wake up, go for a little quick walk if it's not raining, or it's too cold for me anyway. And then from there, just come back, um, do some morning affirmations, quick little workout, stuff like that, just to get me up. I don't really drink coffee or tea or anything like that. I kind of just drink a little bit of salt water, which wakes me up. One, it's disgusting. And apparently it gives you electrolytes for your brain, or your brain needs the sodium or the salt to function at least properly. I'm not a doctor. Please look it up. Um, but yeah, I do that just for like myself in the morning. Meditate a little bit, 5, 10 minutes. Usually 5 minutes gets me at a decent point now. From there, I get on around 8:30, sometimes a little later, like at 9, and just see what's going on pre-market for futures, see if there's any setup setting up, anything like that. And then from there, let's go back to my chart real quick. I'll just have my 4 time frames up, and then I'll just be waiting for whatever's happening. And I'll mark out my levels the day before. So let's say, for example, for YM, so I usually just mark off the 4 hour, the previous week high, previous week low, things like that. And then this way, when I'm trading the following day, I already have these levels. So I don't need to have the 4 hour time frame up anymore because I already know that if price is above this level, we're going to be bullish on the 4 hour. If we're below, it's going to be bearish, right? So just making things easier for myself and saving some time in the morning. And then I just have my setup like this. I have my 4 charts here, and then I have on my other screen some other tickers on Thinkorswim like MES or ES, um, NQ, and sometimes RTY I'll throw up there. But usually I'm looking at YM, and then I'll look at gold as well. And then for options, I don't really stray away unless I'm swinging or swing trading. I just have Tesla up otherwise and just keep it simple. I'm not sure what platform you use to trade, but on Thinkorswim, I can save my contracts. So let's say for Tesla, Webull, you could do it on Webull as well. You can add your contracts to like a watch list. That way they're ready to go because you don't want to like fumble while you're trying to get your trade set up. So looking at Tesla, if my entry tomorrow is going to be at a 428, I'll probably choose anything like a 418, 417 strike. So I'll have those strike prices saved on well, I think someone just be in the save tab on Webull, it'd be a watch list. So instead of me going into the ticker, going into the options chain, choosing the strike price, everything's just ready for me there, right? I just want to save as much time as I can in the morning, just so I just get on and then I'm just ready to go once the market opens. Also, always got to make sure to look at news. So let me switch this real quick. So I always go on Forex Factory and just see what's going on this week. So for example, this week, Monday, Tuesday, Wednesday, we don't really have too much going on, just yellow folders. This is assuming Trump doesn't come out with his tweet or says anything crazy. But we do have CPI and PPI on Friday and Thursday. This is assuming the government opens up and we get the data. If not, not really going to be anything happening. But yeah, always paying attention to the news and what's going to come out the day of. That way I'm prepared and I'm not in a position that it just skyrockets and goes against me. But yeah, that's pretty much how my day goes in the morning. Yeah, because what happened to me before is like, let's say the candle opens up. Let's get rid of this. Let's say the candle opens up as an inside bar over here, and then it's about to hit the short side, but it doesn't hit the short side, and I have a put ready to get in, and then it comes up and reverses. I have to get out of the put, then find the call, and then have that ready to go. Whereas if I have it saved already, I could just go back one or two screens and just choose the contract that I'm going to choose anyway. But yeah, definitely make your platform as efficient as possible for you and whatever works best for you, because time is definitely important when we're trading, to say the least. What else you guys got? Yeah, the UI is definitely really clean on Weeble. I hope that Thinkorswim eventually fixes it or updates it at the very least because it's pretty dated. It works fine, but it's refreshing. Hey, Kia. Steve, the 4 hour trigger to use 15-minute as entry, uh, that doesn't really make sense to me, at least the way I trade. Because if I'm charting on the 4 hour, I'm gonna use the 4 hour to get into my trade. I'm not, I'm not gonna be looking at the 4 hour to break and then look at the 15-minute for an entry. That to me, that doesn't make sense, at least the way I look at it when I'm trading. Unless maybe what you might want to, maybe what you're asking is maybe if it breaks the 4 hour level, and then from there it like closes, a 15-minute candle closes, and then you go long. I don't know.
Yeah, that's what I meant. They
Gotcha.
worded right.
Yeah. So sure, you can do that, right? I do it too for some setups. Like let's say for a TTO, for those who are familiar with that, if we break up above the 4 hour, generally for the TTOs, I want at least the 4 hour, the daily, and the 1 hour to be in my direction. So let's say we break above the 4 hour daily, 1 hour is green, and this is the 15-minute, then we get a pullback, and then I'm just gonna look for the first bullish reversal back into the trend. I'll use that in a way like if it breaks above the 4 hour using the 15-minute for an entry. But it's tied to like a setup, not just like taking a continuation off of, a two up or what have you. I don't really like continuations like that unless it's like a Momo hammer setup or something like that. But yeah, did that help at all? You need to go into more detail or give some more examples? Cool. Anything you want to go over, Kia? anyone else? The floor is open. You see the 4 hour and you're wanting to enter, so you scale back to the 15 minute to determine the time to enter since we're building the new 4 hour. Not really. I just use that as an example because to me, if we open up tomorrow as an inside bar on the 4 hour, let's say we open up here and then we break the 4 hour, I'm getting in as soon as that 4 hour breaks that level. Now, let's say as an example, let's see if I can find one for you guys. And it doesn't have to be let's see, this might be a decent example. So this is the prior day close. This is the new 9:30 market open. As we know about candles, we opened up here. So we had this gap that got filled by that wick. So we had a gap down, right? Let's say for the sake of the conversation, um, let's say this is my 4 hour low, 4 hour short below. Or actually, this would be the low because that's the lowest point of the last 4 hour candle. So the following day, we had a gap down. I don't really care to chase trades because the risk reward is going to be skewed. So I'd rather just let the trade go and just wait another day. That's personally. If it's like 5 cents away and it gaps down, use your discernment, whatever you feel, whatever you're comfortable with. So in this case, we had a 4 hour short below this level. However, we opened up here, right, at this red candle at this level here. So we had this gap that happened. Let's say if I let the trade go and I wanted to get into the trade, I'm going to be looking for one of my setups. Let's say for the sake of this conversation, there's two setups here that I could have taken. We have this shooter or bearish reversal candle printing here. I could have simply just took that two down continuation once it broke the first 15-minute candle. Or I could have taken this bearish TTO right over here, or this bearish H. Uh, a bearish TTO is just a lowercase h, right? Like this, which we have right there. Not the cleanest version, but at least the one that I would prefer anyway, but a bearish TTO nonetheless. So I could have gotten, as soon as this red candle, we got the first bearish reversal back into the trend, would have taken that break. Yeah, exactly. As Luck mentioned, the risk reward isn't even worth it for me on this specific trade. So I wouldn't have taken it because my stop loss for the TTOs is always like on the pullback, whatever that low is, that's going to be my stop loss or high in this case because we're short. And I want at least for my entry to the completed TTO at least to be or the risk to reward 1-to-1, which we don't have here. So this one I would be skipping personally. I think Friday uh gave a cleaner one. Was it Friday? Not the best example on this big H here because we already reversed to the downside. So this would have been your entry for the bearish CTO right here off this reversal candle, but then it got bought up. But let's say for the sake of the conversation, this is our stop loss above the hump and then the completed TTOs down here. We can see that the risk reward is definitely in our favor. So this is one that I would be taking. Does that make sense? You can use the entry candle luck as your stop. Um, I was always just taught to put the stop loss like at the hump, right? But even then, if you do have the stop loss at your entry, if preferably for TTOs, we don't want to see any reversals before it completes, because if it starts reversing before it completes, the probability is going to decrease and it can turn into like a W or an M or something like that. So you can do that if you choose to. Sweet. Fidel, have you studied this strat? Gotcha. Yeah, generally when I'm trading options, I don't really want to babysit the trades since I'm mainly trading futures. So I just use the higher time frames on options, like the 4 hour, and really just keep it as simple as that. If we can get a nice inside bar and then, like a two up or two down, something like that, those are really good. But again, you just have to pray that it doesn't gap up or down. That's usually annoying if it does happen. What are some of the general defaults that you eyeball? When you say defaults, what do you mean? Like tickers? I only really look at Tesla when I'm day trading. That's pretty much it. Whatever's on the watch list is just really for other people since they use those levels. No, options, you can trade options on futures if you wanted to, which to me is a little weird because it's like I'm trying to get away from data and the Greeks not trying to double upon it. But yeah, really for when I'm trading options, I really just traded on Tesla. And then if I see a good, decent swing trade, I'll add that to the list on Sundays. I used to trade the other ones like, um, SPY and stuff like that. But Trading futures to me is like if you're gonna trade those, in my opinion, might as well just trade futures because there's no theta or anything like that, at least for the indices. If you're gonna trade other regular stock and stuff like that, then yeah, definitely learn options for them. And it gives for variety, right? Because if nothing happens for me for futures, at least something might happen to me with me for options on that front. Sam, I don't really back test as much as I used to, just because um, I kind of just have my go-to setups, right? And just wait for them. I actually haven't taken that many trades futures wise as I did in the first half of the year for the last like 2 months. Hold on, let me bring this up real quick. Yeah, I haven't taken that many futures trades in the last 2 months compared to what I usually take. I'm averaging maybe like 2 to 3, maybe 2 to 4 trades a week when I used to be anywhere between like 7 to 10 trades a week for futures. Mainly because the setups that I usually go for haven't been printing as much or not as cleanly. So, oh, my computer's off. So, yeah, not as much. Um, I wouldn't, when I did do it, I wouldn't really look at it like on a visual level. I will still kind of get data off it. Like, let's say, um, if I'm looking at W's, I'll see like how many of them might have like just gone straight to both targets, how many of them only hit like target one and then reversed and things like that. Like recently, I'd say in the last 2, 3, maybe 2, 4 months, I haven't been getting proper follow through on the W's in the sense of if it's going to be a valid one, it's just going to skyrocket to target two. But usually it's been hitting like target one, kind of hanging out and then like reversing. But here and there, we'll get some really good ones that just go straight to targets and do what it needs to do. Yeah, the only real sets I've been taking on futures has been the W, can play setups. What else? Breaker blocks have been pretty rare for me. Chain state delivery has been slowed down. Yeah, really just like a lot of W's and kitten plays from what it looks like since September, August, and before I had a little more variety. Yeah, back testing can definitely be annoying sometimes. Um, Definitely get a spreadsheet. It helps collect the data. That's what I did anyway. No silly questions, Fidel. Anything you want to ask is fine. Is day trading, does day trading equal option zero DTE? Not really. You can day trade monthly contracts if you wanted to. I wouldn't because it doesn't make sense. Like you're paying all this money. Um, but yeah, you can trade zero DTEs. Let's say like for SPY, I believe those have zero DTE contracts every day. When I did trade the indices options wise, I would always do one DTE. Yeah, day trading is not the same as option zero D. Those are two different things. Day trading is just buying and selling the same day. Options zero DTE is going to be a day trade because the option is going to expire that same day. So you're either going to make money or you're not going to make money. And if somebody's trying to swing trade with a zero DTE, they need to go back to paper because that makes zero sense. So they're not, I would say they just happen to be correlated because you're going to day trade zero DTE. There really isn't any other option but to day trade them. Yeah. Now if it's like let's say a Tuesday and I get the Friday expiration, I'm gonna be
Along with the looming meeting
uh,
between the leader.
I'm gonna be what's the word? I'm gonna be day trading like a Friday contract if it's a Tuesday, because that's the only option I have, right? That's like that's the closest contract that I can choose until expiration. Do you still journal strictly at this point or review journals? I don't review my journals as much as I used to, mainly because like when I get on, it's kind of just the same thing. All right, cool, there's a W. I already know what's gonna happen. At least let me be more specific. Not that I know what's gonna happen when I take a W, more so I get in the trade, it's my target, it doesn't. Basically it. Did I feel anything? Was I annoyed? Sure, I'll write that stuff down. Um, but when it comes to like extensive journaling or like reviewing, not as much because not too much is like fluctuating for me in that regard. So it's very similar to pretty much what's been going on for a while. And me not taking as many trades as I was, not too much there. At least not too much to write. Kind of just same thing week in, week out at this point. I will say I did add MNQ back in my rotation, futures to take or trades to take on. There'll be some times where there's a setup on, let's say, ES or MES, and they're identical on MNQ and MES, but the one on MNQ will be a lot cleaner than it would be on MES. So I've kind of added that back into my rotation recently. Yeah, like I'm pretty as you're saying, not as strict as I was before. Just because at least for me personally, I don't really see a reason for it. Hey, no problem, Fidel. Thanks for your questions as well. We got a few more minutes. Anybody have another last question and then we'll wrap up and go enjoy our Sunday. Do you do this type of Q&A call? So I do something similar to this in my group every week on Thursdays. For the public like this, I have it every second Sunday of the month. So the same link that you use to sign up for this is the same one that you can use for the next sessions as well. So whatever link you use to get this one, use the exact same one to sign up for next month. And then next week, I'll have something similar to this on YouTube. I usually host it there for other groups that I support. I just prefer the Zoom experience personally. Cool. Before we wrap up, what was everybody's biggest takeaway and what did you learn from today? Put it in the chat, come off mute. Anyone is fine.
Or our trade. trigger, stay on that trigger and ride the 4 hour instead of going down to the 15 minute. That's what I'm gathering.
100%. One thing to note
That,
about 4 hour, like I was doing earlier that you guys were seeing me on Tesla, like Tesla wise or the strat wise anyway, our first target is all the way up down here at 421.88. Me personally with Tesla, I'm not gonna hold it for $6 because Tesla has to go in your favor three, $4 or five or whatever, then it'll reverse and go the other way. So I'll have like targets in between, right? So let's say if I wanted some targets on the way to the strat target, get your fib tool, fib that out, and then let's say for the sake of the conversation, when it breaks that level, I have this fib target here, and then I have the strat target there. So just to get more variety, because Tesla likes to do its own thing sometimes. But yeah, if you're getting on the 4 hour, mark off the levels, get your targets however you want to get them, and just wait. Because I find people get like, let's say charting the 4 hour or daily, and then they go on the 5 minute. And then they're like, oh my God, the price is reversing against me. Let me get out. But it's like, it's the 5 minute candle. Of course, there's going to be reversals. That's normal. So you don't want to psych yourself out of a trade.
and that's what I was doing. That little bitty candle inside that 4 hour candle was killing me.
Hmm. Then I've been there as well. That's the rule. But the last rule that I added on my list, I have do not look at the ticker when it's a swing trade. Because what happened to me, I think this was like 2 years ago at this point, I got in a swing. And for whatever reason, I was on the 1 hour time frame when I got in like on a weekly or daily. And um, the 1 hour was started to reverse. And I'm like, oh crap, the 1 hour's reversing. Let me get out. So I got off like 20% gain, which is silly because it's like it's the 1 hour, but you're charting on the daily or weekly. Anyway, the following day, it hits my weekly target and it was like 200% if I didn't get out. And after that happened, I was like, I will never look at a lower time frame again when I'm swing trading because it doesn't make sense. I'm just gonna psych myself out of the trade for no reason when everything is still good. How do you determine the stop loss for options? Fidel, I think I might have put that up last week on you can check out the video of choosing option contracts for swing trading. I think I released it last week. I believe I go over that there for stop loss on options. If not, if you go to the playlist section on the YouTube, if you go to, I think it's in trainings and walk, no, it's on building your trading system and the psychology of trading. In that playlist, there's one that says risk management. I believe I go into like how I risk things for options. If it's not clear, just let me know like in one of the comments on the videos, and then I'll see if I can explain it better. But yeah, looks like that's all you guys have. Yeah, Sam, definitely back test, build that Excel sheet, get as much data as you can to just make it easier for yourself. I will see you guys next time. Enjoy your Sunday. I'm gonna post this recording more than likely Tuesday around noonish if you want to see the recording on that. Anyway, enjoy your night, and I will see you guys for the next one. Thanks for coming out.